Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is January 24, 2023, and I'm going to go over your three threes for the week. I'm going to go over our major asset classes, their performance, and our top three favorite on a long-term basis, and how we are positioned on both equities and bonds on a short-term basis, and our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes, their performance on a week and a 1-year return basis. For the week, we actually had a tale of two markets last week. The markets for the first 3 days sold off, and then on Thursday and Friday rebounded. And basically everything finished plus or minus 1% for the week, except Bitcoin. Bitcoin being the biggest loser last year, so far this year is the biggest winner. And so we'll find out whether or not this is a bear market rally or not in Bitcoin and the cryptocurrencies. But really a muted week last week for markets in general. On a 1-year basis, we still only have the US dollar, gold, and commodities as our three positives, while everything else is chipping away at their negative numbers from last year. Okay, let's go over the top three major asset classes on a long-term basis for January 24, 2023. We do have a change and a new entry. Global equities ex-US has jumped dividend equities to come into the top three. So even though that's not defensive in nature, we still have T-bills and gold as our top two. So we are starting to see some other equities start to move their way up the top of the chart. All right, let's go over the bonds on a short-term basis. Again, keep in mind, we'll go over this chart every week. Last year, we did have negative numbers on the equities and on the bonds, but so far so good for the aggregate bond index, up 3.2 year to date. And again, we started nibbling and buying bonds back in mid-November. And so far so good. This is what we kind of want to see. We have right now higher lows and higher highs on the bonds. So we really like the aggregate bond, and we've had the 10-year interest rates drop from 3.88 to 3.48, even though the Fed is raising interest rates. They're kind of anticipating what's going on, as the Fed might either pivot or they might stop and raising interest rates towards the middle half of this year into the third and fourth quarter. All right, let's talk about equities on a short-term basis. Again, last year, as I said, equities were negative. So far, so good also on the equity side. However, their chart looks a little bit different. What we're seeing right now, we started to nibble and add here a couple weeks ago on the equities, and this support level is holding as of now. But we have got to see, we've got one half of what the bonds chart has. We right now have higher lows, but we need to see some higher highs on the S&P 500 before we can get the, yay, we're finally possibly breaking to new highs. So we've got to get up into this 4,100 to 4,200. And so we still have another 4, 5, 6% yet before we can get in that area, before we can possibly get an all clear for equities moving forward on a short-term basis. All right, let's go over the top three market movers for the week, January 24, 2023. On Thursday, we have the fourth quarter GDP, and the BEA will release the advance estimates for the fourth quarter. As you know, we get three estimates. This is the first one, and whether or not the U.S. economy is expanding or not for the last last 3 months of last year. Right now, the projections are 2.5 on a seasonally adjusted annual rate, and that's following the third quarter's at 3.2. And if you remember right, first and second quarter were both negative. So that's a positive, but really the question is that that's already priced in the book. What is the first quarter and possibly the second quarter of 2023 going to look like? Well, we'll start updating that here over the next couple of weeks and kind of get some early projections there. Friday, we have the personal consumption expenditures, or the PCE index. And that will be out on Friday, and that gives us another look on inflation. If you remember, 2 weeks ago, we had the CPI number come out, and it has started to come down. And so most likely the PCE is also going to come down. And right now, it's, instead of being 0.4 in November, the estimates are for 0.1 in December. So on an annual basis, the rate will have come down from 7 to 5.5 in November to 5.1 in December. So that'll be a positive. And we'll see how the market reacts here on Friday once we get that. The other third top market mover for the week is corporate earnings. We have we're deep in the heart of earnings season. And so here's a listing of them for this week. I'm not going to go over every single one of these, but you can get a feel because we've got some big ones: Microsoft, J&J, Verizon, Tesla, which will be a big one on Wednesday, IBM, Visa, MasterCard, Chevron, American Express, all coming out this week. So we shall see what they've already lowered the bar. We shall see if they can jump over that lower bar, or what their projections are moving forward, if they even have any. All right, that's it for this week. Thank you for joining us. Our next update is Monday, January 30th. As always, continue to subscribe, like, and comment, and we shall see you next week. Have a great week trading.